Hello friends. There are topics most of us prefer not to think about, and I understand that completely. It is uncomfortable, it is heavy, and it is something we naturally want to push to the back of our minds. But there are things that need to be known, even if they are deeply uncomfortable to talk about. What I'm going to cover today is one of those critical subjects, because if you have a bank account in your sole name right now, there is a very real, very frightening chance that if you died tonight, your family could not access a single pound of that money. Not tomorrow, not next week, not without a complex legal process that takes months and costs thousands of pounds. Here is the truth that many people find out way too late. A will would not help them at the bank counter. A solicitor's letter would not help them either. And the most frustrating part of all? Nobody in the financial system is going to explain this to you in advance. Today, I want to walk you through calmly, clearly, and step by step exactly what happens to your hard-earned money when you pass away in the United Kingdom. More importantly, I am going to share the one straightforward, completely free thing you can do this week, while everything is absolutely fine, to make sure your family is protected when the time comes. Before we begin, I would like to remind you that many pensioners could be eligible for a new extra support payment of £200. If you have not heard about this yet, I have left detailed information from an official source in the comments below the video. Make sure to check it out. And now, let us move on to the topic of today's video. Let me start with a story, because the legal framework I am about to explain is much easier to understand when you see exactly what it looks like in practice. Let us talk about Margaret. Margaret was 73 years old. She was a retired school teacher from Leicester who had spent 35 years dedicating her life to the classroom and saving carefully throughout her working life. She was prudent, organized, and careful. By the time she retired, she had accumulated £180,000 in a savings account at her local bank, the exact same high street branch she had used for over 30 years. Margaret believed she had done everything perfectly to protect her children. She had a professionally drafted will, properly witnessed by a solicitor, and stored safely in a folder with her important documents at home. In that will, she clearly named her two adult sons as equal beneficiaries of everything she owned. She had even told both of them exactly where to find the folder. She went to sleep every night believing everything was in perfect order. It was not. Margaret passed away suddenly. Once the initial shock settled, her sons went to the bank branch, holding her death certificate and her professionally written will, expecting to sort out the funeral expenses and manage the account. Instead, they hit a brick wall. The branch manager explained as gently and clearly as she could that the will had absolutely no authority over the bank account. The account was in Margaret's sole name. Therefore, the bank had a strict legal obligation to freeze it immediately upon notification of her death. No transactions were possible. No money could be released. Not for the funeral, not for immediate household expenses, not for anything at all until the estate had been formally administered through the probate process. The funeral invoice arrived shortly after for £4,800. With their mother's money completely locked away, the sons had no choice but to pay it on their own personal credit cards. The high interest started running that very same week. Think about how absurd and tragic that situation is. Margaret's £180,000 sat just 20 feet away, behind a glass bank counter her sons had absolutely no legal authority to cross. What followed next was the long, grueling probate process. Applications to the probate registry, securing certified copies of the death certificate, paying court fees, and enduring a mandatory waiting period to allow unknown creditors to come forward. From the exact date of Margaret's death to the date her sons were finally able to access and distribute their mother's money, a total of 11 months passed. Nearly a full year. On top of the emotional distress and the waiting, the total legal and administration costs consumed over £8,000 of the estate before a single pound ever reached either of her sons. Margaret did absolutely nothing wrong in her own mind. She had the will, she paid the solicitor, she kept the documents safe. Yet none of it reached inside the bank's rigid legal framework. Her situation was not unusual, unique, or rare. It was the entirely predictable result of a financial system working exactly as it was designed to work. Here is the legal framework that explains why this happens to thousands of families across the United Kingdom every single year. When someone passes away in the United Kingdom, any bank account held solely in the deceased's name is frozen by the financial institution immediately upon notification of the death. It is vital to understand that this is a strict legal obligation imposed on the bank, not an optional policy choice or an act of cruelty by the customer service team. The bank is legally required to protect the estate until a rightful executor is recognized by the state. The account remains completely frozen until the estate is formally administered. This means either obtaining a grant of probate, if there is a valid will, or letters of administration, if the person died without one. That process, which is currently running at a bureaucratic average of 6 to 12 months due to system backlogs, must be fully completed before the bank will release a single pound of any account that sits above its specific threshold. Now, you might wonder if every single account requires probate. The answer is no, but it depends entirely on how much money you have saved. Most major United Kingdom banks, including Barclays, Lloyds, Halifax, Santander, and Nationwide, will release funds without requiring a formal grant of probate for account balances that are below £50,000. However, for accounts above that £50,000 threshold, a grant of probate, or letters of administration, is required with absolutely no exceptions. Furthermore, institutions like NatWest and HSBC assess each case individually and do not even publish a fixed maximum figure, meaning your family is entirely at the mercy of their internal legal departments. If your savings account holds more than £50,000, your family will almost certainly need to go through the full, exhausting probate process before they can touch a single penny. And I must emphasize this again because it is the biggest misconception out there. A will does not change this reality. A will is not a golden ticket that you hand to a bank teller. A will is simply a document addressed to a probate judge. It instructs the court on how to distribute your estate after the legal probate process has run its course. It carries zero legal authority at a bank counter. The bank's legal contract is with the account holder, and if that contract holds only one individual name, the bank cannot and will not act on a will, no matter how crystal clear or how carefully drafted it is. There are 3 specific, everyday situations that put unsuspecting British families into this exact financial trap. The first is holding a sole account with no joint holder. This is the exact situation Margaret found herself in. You opened the account years ago, perhaps decades ago. Nobody at the bank suggested adding another person, and you never thought to do it. You assumed that because your will covers all your assets, your bank accounts are safe. But as we have established, a bank account is governed by a private contract with the financial institution, not by the overarching instructions of a will. The second major trap is the dangerous assumption that a lasting power of attorney, or LPA, covers this situation. Many people who have taken the wise step of arranging an LPA for financial decisions believe that this gives their chosen attorney the immediate authority to access accounts after they pass away. Let me be unequivocally clear, it does not. A lasting power of attorney exists solely to allow someone to manage your affairs while you are alive but incapacitated. The exact millisecond you die, the LPA completely ceases to have any legal effect. The attorney named in your documents has no more authority over your bank account after your death than a complete stranger walking off the street. The third trap is the deeply held belief that marriage automatically transfers bank accounts. In the United Kingdom, marriage does not establish automatic, blanket joint ownership of individual financial accounts. If you have an account in your name and your spouse has an account in their name, they remain completely separate in the eyes of the law upon death. Joint tenancy with the right of survivorship, which is the specific legal arrangement that allows an automatic transfer of funds, must be explicitly set up and documented at the bank itself. A couple who has been happily married for 40 years and always assumed their sole accounts would simply pass to each other will find out, in the darkest moments of grief, that their lifelong assumption was legally incorrect. So, what actually works? What is the solution to this systemic issue? The answer is incredibly simple, entirely free, and can be done within a matter of days. It is a joint account held specifically as joint tenants with the right of survivorship. When an account is structured this way, the funds do not form part of the sole estate that needs to go through probate. Instead, the money passes automatically and instantly to the surviving account holder upon your death. All the surviving holder needs to do is provide the bank with a certified copy of the death certificate. Once received, the bank simply removes the deceased person's name and transfers the account entirely into the sole name of the survivor. There is no probate required. There is no court intervention. There is no agonizing waiting period, and there are absolutely no solicitor fees. The entire transfer happens in a matter of days, not months. This is the exact financial arrangement that the vast majority of couples in the United Kingdom should be using for their primary current and savings accounts. Yet tragic numbers of people are not using it simply because nobody asked them to set it up when they originally opened their accounts. However, before you rush to change everything, there is one critical financial consideration you must fully understand. The moment you add another person as a joint holder to your bank account, they gain full, unrestricted legal access to every single penny in that account right now, while you are still alive. They do not need your permission to withdraw funds tomorrow. Furthermore, if your chosen joint holder encounters severe financial difficulties, such as mounting debts, a messy divorce, or a legal judgment against them, the money in that joint account could, in theory, be targeted and accessed by their creditors. For a spouse in a long-term, stable relationship, this risk is generally well understood, minimal, and accepted. But if you are thinking about adding an adult child to your account just to avoid probate, that risk becomes highly variable. It is a decision that must be made consciously, carefully, and strategically, never by default. For amounts held in sole accounts that you cannot or do not want to easily restructure, perhaps a recent large inheritance, or the lump sum proceeds from a property sale, the most practical step you can take right now is to ensure your family has complete transparency. They must know exactly where each account is held, which banks you use, and what the approximate balances are. It is also worth knowing that most major United Kingdom banks will agree to release a specific, limited amount of money before probate is granted to directly pay for funeral expenses. Typically, this is capped up to £5,000, and the bank will pay the funeral home directly upon the presentation of the official funeral director's invoice and a death certificate. While this is incredibly helpful, remember that it does not unlock the rest of the account. It is merely a specific, compassionate provision to cover the most immediate, unavoidable practical need. When it comes to notifying the financial system after a passing, there is a brilliant, completely free service available that everyone should know about. It is called the Death Notification Service. This service allows a grieving family to make a single online notification that instantly reaches Barclays, HSBC, Lloyds, NatWest, Santander, Nationwide, and Shawbrook simultaneously. This drastically reduces the number of individual, emotionally exhausting phone calls your family has to make during the first few days of loss. It can be easily accessed online at deathnotificationservice.co.uk. For government departments, you should utilize the official Tell Us Once service, which is available directly through the gov.uk website or via the local registrar when the death is formally registered. This brilliant initiative notifies HMRC, the Department for Work and Pensions, the Passport Office, and the DVLA, all in one single coordinated step, ensuring that state pensions and benefits are paused correctly without delay. Here is your exact action plan for this week. Do not put this off. First, sit down and look closely at your bank accounts. Identify every single one that is held strictly in your sole name. Second, for each of those sole accounts, consider whether adding your spouse, partner, or a deeply trusted family member as a joint holder with the right of survivorship makes genuine financial sense for your specific situation. Third, if it makes sense, contact your bank immediately and ask them about the paperwork required for converting the account or opening a new joint account. It is a completely free process. Fourth, make sure your family knows exactly where your accounts are held and keep the death notification service.co.uk address printed out right alongside your important documents. Fifth, if you currently have a lasting power of attorney in place, sit down with the person named as your attorney and make sure they understand clearly that their legal authority ends the exact moment you pass away. Your will is undeniably important. Your solicitor is important. Your overall estate plan is important. But remember this, none of them can reach inside a private bank contract. The structural setup of your bank accounts, whether they are held solely or jointly, is the single factor that determines whether your family walks out of a high street bank with immediate access to your money, or whether they spend the next 12 months and thousands of pounds fighting through a bureaucratic court process that could have been avoided entirely with one free form. Thank you for watching. Please subscribe to the channel and share this video right now with someone you know who keeps a bank account in their sole name. It could save their family from an absolute nightmare. I will see you in the next video.